Welcome back to Power Lunch. As promised, we're going to be focusing a little bit in detail on equity markets around the world. When you look at Asia, most Asian stocks have been swinging between losses and gains, and a lot of profit taking seems to have emerged, particularly in Japanese stocks after the yen bounced off the lows. And as far as European markets go, they've had a flat start this afternoon. Mr. Stephen Pope, Managing Partner with Spotlight Ideas, is with us right now from London. Steve, hi, this is Bianca. Thanks for taking our call. All eyes on post-election Japan, you'd say. But then, of course, that big rally that started off after Shinzo Abe's big election win, that seems to have fizzled out. Do you think that this was pretty much factored in the markets, and Abe's, his return, his win, is likely to be negative for the yen?
I think it probably does give a bit of a weakened tone to the yen, because what we've been seeing is the sentiment was what's going to actually be the outshot of this victory coming through. Now, what it means is he hasn't got the full majority, which allows big, sweeping constitutional changes. So it comes back, and there's a lot of speculation about tax changes, an increase in sales tax, but a decrease in corporation tax. And so there's a bit of an uncertain jury as to exactly how that's going to affect the economy going forward. I think what we probably also need to see from them is a good piece of dialogue coming through about Japan going through what we could call fiscal house cleaning, because they really need to try and rein in some of the excessive level of debt to GDP that Japan experiences.
In Europe, is it likely to be a listless week? We've got a bunch of economic data surveys, etc., coming up later. But I guess that in all likelihood, they're only going to talk about how much more the Eurozone economies will have to do to get out, of their debt and their banking crisis situations.
Yes, that's right. I think if we look at the Eurozone this week, it's going to be the flash PMI numbers again. And unfortunately, majority of those are going to be below 50. You'll probably hear some upbeat talk if things are not quite as deep into the 40s as they were last time round. But generally speaking, Europe will still be looking as though it's contracting. I think the German IFO will be very important as well. Otherwise, I think you're going to see that they'll be looking at the banks. We've seen that financials actually had a pretty decent week in the course of the last 5 days of trading. And we've got off to a reasonable start with UBS coming in ahead and looking as though it made an agreement with US authorities over various illegalities that they've been pursuing over the years. So all in all, I think that the financials will still try and lead us forward, but it's only going to be the strong, the major financials that will do so. Any bank that's seen to be marginal or being seen as a constant customer at the window of the ECB for financing, they're probably going to come under some pressure. So a mixed bag financially.
Steve, many voices from Europe over the last 1 week, they've indicated to us that the euro area is likely to have just about escaped a recession in the second quarter. Would you agree with that view, or would you say that no? We've seen a contraction in the eurozone in the second quarter, and it's likely to continue even in the third one.
Yeah, I think what you're going to have to see is that we are putting too much reliance upon Germany being the engine that pulls the whole eurozone forward. And my worry is that their trade data was poor last time out, so that could have an impact. I think that if we do see growth in the Eurozone, it will be by the skin of its teeth, because at the moment the periphery is still contracting. It's not adding anything to the GDP. France is probably itself still deep in recession and is not actually being a contributor. So I think that it's putting too much pressure on Germany. And I sense that any growth that comes from the Eurozone is going to be tepid, because we have unanswered questions about how do you deal with the banks. Until the financial sector is right, the general economic structure is not going to be right. And then we keep dithering and waiting until we get past September 22nd for any meaningful stab at reform within the Eurozone. So I think we just muddle on, and if anything, at best we're just blipping above the baseline. But I still have a very big negative myself on the Eurozone and its potential performance.
Steve, aside of economic data, I think another big focus is likely to be US earnings. Quite a few companies are reporting earnings this week, and that's going to go a long way towards setting the tone going ahead. But then, of course, we've also got from the US, we've got existing and new home sales data. That's also likely to be key for the markets?
Yes, certainly earnings so far from Wall Street have been quite encouraging, because I think it's something in the region of 67% of companies have beaten on revenue, and around 60% or so have beaten upon their profits. So all in all, it's not looking too bad. But the worry is, are we seeing the US economy being too much swelled by the housing market? We've been down that road before, so that's a worry. But generally speaking, if we are finding that housing is going ahead because builders are being able to get finance and consumers are getting finance and maybe are still being able to refinance old mortgages at decent rates, then I think that we're probably in not too bad a track. My worry is that, don't forget last week we had Detroit declaring bankruptcy. How many other US cities are maybe looking at that potential situation? And that could be something of a problem for the US going forward.
Right, Steve. We've also got quite a few companies reporting their earnings this week here in India as well. And of course, we're keeping a close eye on the rupee. So exciting times these. Thank you very much, Steve, for your time.